Good morning and welcome to IG's early morning call. It is the 5th of September. It's a Tuesday. Let's take a look at the headlines as we wait the start of today's European session. Looking for a slightly lower start to the trading day today across the European markets. The Australian dollar is in amongst the headlines in today's session. We've seen a statement out today from the Reserve Bank of Australia which accompanied the interest rate announcement where it's kept rate on hold. And it's for a third month in a row, but it did say that there was the prospect of further interest rate rises at some time to come. Let's take a look at what's happening elsewhere in the markets. With a drop in Asia shares today, we've seen the Caixin Services PMI rise, but at the slowest rate in 8 months. And this has affected pretty much all of the markets as things stand there at the moment across Asia. I say that, we'll take a look at one market which is outpacing the drop. And Hong Kong shares on the way down. UK retail sales, I should say, monitor rising at the fastest rate in 4 months. Let's take a look at what's happening on the volatility markets as we monitor the interest in the market and the volatility has bounced off the recent lows, but it's nothing of any major upside. And as I've been following, this total retracement at 1507 is still, so far as I'm concerned, on the cards. This is just a small retracement in what is otherwise a market which looks like it's wanting to go down to that line of support, which was the low point we saw back on the 27th of July. Now, let's take a look at what's happening across the European markets, because we are penciling in a drop at the start today. As I'll explain in just a couple of minutes' time, we've seen some disappointing numbers come through from the British Retail Consortium, which, whilst it's rising, it's still well below inflation. And the problem is that whilst there are people going out there to shop, they're looking at discount items, they're looking at items which, quite frankly, don't really contribute that much. And so we've got the FTSE on the 24-hour markets. It's on the way down for a second day in a row, approaching this psychologically important line of support at 7,400, just 17 points above that at the moment. You get a candle close below there. And then you've got to look at the next line of support, which is the low point we saw back on the 20th of March this year at 72.03. Let's look at what's happening across the European continent, because it's a very similar story in terms of the direction of travel. Third day in a row of losses on the German DAX, approaching the 76.4% retracement, which quite frankly is now all but been erased. But I've still got it on here as an interesting line of support at 15,709. But to be frank with you, for me, we didn't get a new higher high there. That is still the high that we had. So I think this is just a market that wants to go down. And in fact, the total retracement of this Fibonacci would take us down to the 200-day moving average at 15,489. So I think that is a significant, potentially significant level to watch out for. So if you're short on this, that would be your price target, or the total retracement of this move from the lows we had back on the 7th of July. Let's look at what's happening in the French markets, as we always do, just to take the temperature of what's going on across the major markets in Europe. And we're fifth day on the row of declines on the 24-hour markets, IG showing that we're going to get a lower start there as well for the trading day when things get underway at the top of the hour. 72.35, substantially below the close on the cash session yesterday, indicating that money is coming out of this market as well. A bit like the German DAX, I've still got this Fibonacci on here, but to be honest with you, this is now looking as though that too wants to meet the 200-day moving average at 71.84. So if you're short on this again, that would be your area of support to watch out for. Let's take a look at what's been happening on the Asia-Pacific markets overnight, because there has been some interest in one area of the market, and it's the Nikkei 225. It's not a big move, but it is nonetheless a move up in what is otherwise a down day. I'll talk in some more detail about the economic data out in China in just a moment, but just take it from me at the moment, that drop. Can we go back to the list of companies, because list of stock indices, I should say, because the Hang Seng stock index down 1.34%. And I think this is going to be one of those areas of the market where I think there will be a continuation of this slide because of the poor economic data coming out of China. S&P ASX 200 down 0.25% on the session at the close there today. The Hang Seng stock index still has 90 minutes of the trading day left there to go today. What I want to show you is the Nikkei 225 and this rise that we've got, which is becoming a nice little trend. And in fact, when you see trend opportunities, you look at what the markets are bringing, and the nice little bracket here to highlight, which is this trade that we've seen since the lows we had back on the 25th of August, new higher highs, new higher lows, indicating for me that this is a market that does want to go up. Now, we'll see in just a minute, the Japanese yen continues to weaken, and this is a really big area of the market where I think that there is real concerns about the Japanese yen. There's been no indication from the Japanese authorities of wanting to intervene, but we're absolutely at the top of the candle here on the dollar against the yen. Now, this is the dollar rising against the Japanese yen. The Nikkei 225 is packed full of exporters, and they benefit from a weaker Japanese yen. There's two reasons why exporters benefit when the currency, local currency, drops. First of all, is it's easier to find the overseas markets in which they're looking for sales. And the second thing is when you repatriate dollars, sterling, euros, whatever it might be, back into Japanese yen, it has a double whammy effect. In other words, you've got a better result for your balance sheet. So it is actually looking good. And in fact, significantly here, we're now up at the highest level that we've seen since the 4th of November. And of course, that was the point at which we saw the last intervention by the Japanese government. which gave us that slightly stronger Japanese yen. That's the dollar down against the stronger yen. And it was clear then that Japanese authorities wanted to weaken the yen. But as we've heard nothing substantially about this there at the moment. Conversely, we've seen more evidence to suggest that the Japanese authorities are actually wanting to continue with their path of seeing the Japanese yen weaker and seem to be quite happy with that at the moment. So we're not quite as high as we were intraday a couple of weeks or a week or so ago, but very clear, if we close at these levels, it'll be the highest close that we've seen there on the market since the 3rd of November last year. Let's take a look at the Wall Street close. As of the end of yesterday's session, we saw the Dow Industrials up 1/3 of 1%, S&P 500 up by a lower margin, and there was a drop, but only by a very small fraction, on the Nasdaq Composite. Now, that was Friday's trade, of course, because it was a Labour Market Day holiday yesterday. But I want to show you what's going on with the 24-hour markets. IG had a market open yesterday, and it was a down day on the Dow, the S&P, and the Nasdaq for the 24-hour markets. But today we're back in harness, and we'll see US stocks start trading again on the IG platform. Today we're down again at 34,769. I think the impetus does seem to be a market which wants to sell off from the recent highs that we've got, 3rd day in a row again of losses in the 24-hour markets on the Nasdaq as well. So you can see, despite the fact it was a Labor Day holiday yesterday, you could still trade these markets, but the short trade was very much in evidence. It'll be interesting to see what happens when the US markets come back across the pond and how they make out what's happening in the global markets on from that Labor Day holiday. So that's where we are in terms of the move at the moment, looking potentially for a weaker start when things get underway later on the US markets. Now, the biggest move on the foreign exchange markets on this Tuesday, 5th of September, is a slide in the Australian dollar. What's behind it? Well, it's the Australian interest rate decision, I think, more than anything else, although there is impetus as well coming through from some poor economic data in China. Let's take a look at what happened today from the RBA. The Reserve Bank of Australia kept its cash rate at 4.1% for a 3rd month in a row. In its statement, the RBA said the Australian economy was experiencing a period of below-trend growth and expected it to continue for a while. The RBA warned again that further tightening might be needed to bring it to heel in a reasonable time frame. Yesterday, a Reuters poll on the RBA rate decision said most economists expect a final rate hike next quarter. It added that inflation was still too high in the Australian economy and noted that the services price inflation had been surprisingly persistent overseas, and the same could occur in Australia. Add all this up, and it was a down day for the Australian dollar, most notably against the US dollar. Now, look at this move that we've got here at the moment. We close at these levels. It will be the lowest close on this market that we've seen since the 4th of November. I was talking about this this trend trading pattern here that's built up as we broke the neckline of this double top. The double top pattern is where you get a top at very similar levels. First top establishes a drop, and then you get back up there, and then you break that, and you extend the line between the two line of resistance and support, extend that down here, and you get that low point down here at 6,300, which is a nice round number. And I know as technical analysts, we all look to psychologically important levels, and 63 cents is a particularly good level to watch out for. And as I say, lowest since the 4th of November last year. So there's weakness in the Australian dollar. But if you are a foreign exchange trader, there's an opportunity here to trade against a number of currencies. And if this trend continues, and if you're short in any of these, you'll be making money at the moment. Big drop today against the Canadian dollar. This is the biggest drop that we've seen there since the 23rd of June. Similar sort of thing. I think this area at 62.25 is an area of interest to watch out for that. Let's take a look at what's happening as well against the other areas of the market, because the Aussie is down against a whole basket of currencies. It's down against the Japanese yen, approaching this line of support at 93.09, which is the 61.8% retracement that we tried to break and failed to break before from the fib that started back on the 31st of May, the swing high we saw on the 19th of June. And this is an area of interest, I think almost certainly worth watching. Let me just pull this out to get you some more evidence as to where we are and some better levels or better graphics to work with. They are 93.10 is this line to break. You get a candle close below there, which coincides with the 100-period moving average. You're then on the way down to the 200-day moving average at 92.01, which is the next line of support to watch out for the Aussie against the Japanese yen. Against the euro, similar sort of price action today at 93 59.30, I beg your pardon, on the way down for a second day in a row. So the Aussie short against a whole basket of currencies. The British Retail Consortium has come out with its monthly report, like-for-like sales growth, a measure that adjusts for changes in store space, rose to 4.3% in August. Now, this accelerated from 1.8% in the prior month, and the fastest rate of gains in 4 months at the BRC. Still, the August figure came in below the 6.8% consumer inflation rate in the UK for July, indicating that sales fell in terms of volumes. Now, we continue to monitor what's happening with sterling. I'm not suggesting necessarily we've got a twist on sterling today because of this. We do happen to have sterling down, and indeed, at the moment, this is technically it's a bearish engulfing candle, which means that it is looking as though potentially we could well end up getting further declines. That is a candle which is bigger than the prior day's candle. The prior day's candle was bullish. This is a bigger candle, so it's a bearish reversing candle. And at the moment, we're very close to levels that we've seen in this market, not seen since the 13th of June. So direction of travel seems to be weaker sterling at the moment. There is another interest rate rise penciled in from the Bank of England in a couple of weeks' time. It meets the same week as the Federal Reserve, which the jury is out as to whether the Fed has done enough in terms of interest rates. So it'll be interesting to see how things develop there for sterling against the US dollar. Now, I mentioned a lot about what's been happening for the Chinese markets because it is central to what's going on the global markets because of its dependence in terms of raw materials from other areas of the world, but also exports are well down in China. It's not just manufacturing, but also services as well. Services activity did expand in the month of August, but at the slowest rate in 8 months. The Caixin S&P Global Services Purchasing Managers Index, PMI, dropped to 51.8 from 54.1 the previous month. Details the survey show that the increase in new orders is below the average seen for 2023 to date, and new export business fell for the first time since December. Now, anything above 50 indicates expansion, which is where we get this expansion from, but this is a disappointing number. The Caixin S&P's composite PMI, which compiles both manufacturing and services activity, edged down to 51.7 from 51.9 in July, the weakest expansion since January. Now, how do we trade this? Well, you go down on a short position against the US dollar for the Chinese yuan. Let me just bring up a chart showing you what's going on the foreign exchange markets for the dollar against the offshore yuan. And this is the market that we see at the moment. You can see this market rising. If you look at the chart here, rising for a second day in a row. This is the dollar rising against the Chinese yuan. I've had this line at 72,680 drawn on here. There was a number of reasons. I think it goes back actually in detail, back to the 20th of September last year. But this is an area of interest. When you get a break of support, it's normally quite big, and that was the candle that was a big break of support. We came back, we tried and tested that in resistance, and again, we tested it again back on the 28th of November, and again, you can see here, this area, we didn't actually get a candle close beyond that around the end of June. So this is an area of interest at 72,680, and bouncing off this indicates to me there's a technical and a fundamental reason to be buying dollars against the Chinese yuan. This is the offshore yuan. Let's take a look at some of the other economic data out today, which is where most of the data today circles. At 10 o'clock this morning, producer prices in the Eurozone expected to fall by a margin of 0.6% in July, month on month. Year on year, PPI expected to fall by 7.6%. Now, this has been one area of interest in the market because these figures year on year have continued to be relatively high. Now, at this time of the year, against last year's figure, we're now beginning to come up against some of the larger numbers coming through last year. Remember, we had that big rise in copper, in timber, all the raw materials because of the supply chain issues, and producer prices went up enormously. But we're expecting a drop here in the month of July, month on month, year on year, down 7.6%. So now, how do you trade this? Well, it's a short euro trade, and that's exactly what's developing here. Again, a bearish engulfing candle. We're now down and have hit levels there not seen since the 13th of June, indicating potentially a short position. If you're short on this, not a trade recommendation, but if you were to be short on this, your stop goes above the 200-day moving average, around about the 108.50 level. We're currently trading 107.68. Your next line of support to watch out for is down here, which is the total retracement of the move we got in this fib here from the 31st of May. The swing high we saw up at 112.75. That gives us the 76.4% retracement. If we see a continuation of trade below there, I'd be more than happy to go short on this all the way down to 106.35, keeping my stop tightly tied in behind this. This is the euro falling against the US dollar. So any further evidence that there's damage being caused by high interest rates in Europe, and we've got the ECB wanting to raise rates again, this could well affect many economies across the Eurozone. Interesting to see what happens with the PPI data out a little bit later on today. Also, when watching this, you've got to consider what's going on with the US dollar. Let's take a look at some of the data out later on today in the States. So get factory orders anticipated to fall by 2.5%. Now, this is a July number, so it's relatively backward looking, and I can't think it's really going to be of major importance to the markets, although as we see the US come back, it is the first data point to watch out for in what is a foreshortened week. This is a July month-on-month reading, a drop by 2.5%, which is expected. Now, let's go on to take a look at what's happening with some of the corporates today. There's just one that's come out, I think, of interest here in the London markets. It's Ashtead, the business services company. This is a business that sells or rents equipment out to companies. And the company's come through with group revenue up 19%. US revenue up 22%. It's really big in the States. In fact, reports in dollars. Rental revenue up 14%. EBITDA up 18%. Adjusted earnings per share increasing 14%. Whichever way you look at this, we've got some really decent numbers coming through from Ashtead. 40 locations added in North America. $1.13 billion of capital invested in the business over to 2022. 361 million spent on 9 bolt-on acquisitions. Now, when you have this sort of increase in coverage of the company, you would normally expect to see an improvement in the overall value of the business. But if you look at the share price chart, what I've done here, this red box here represents the very first trade of 2022 and where we are today. This is a stock that's down almost 11%, despite the fact we've seen enormous amounts of weight added in terms of assets. So this rise that we've seen recently is of interest. We've got a rising line of support, and one would hope that perhaps maybe we might end up seeing that line of support established as a good rising line to continue. But I'm not completely convinced. The good numbers out today, but on the whole, I think there's a tendency to look at these companies and wonder perhaps maybe just what investments have been undertaken. What I haven't seen is just how they paid for this. And this is the thing when talking about EBITDA, the I is really interesting. It's the interest part of the business. And when you buy all these businesses, most of them, I guess, will have been added in terms of debt. And when you see debt used as a tool, we've got low interest rates, that's fine, but interest rates are going up. So my only concern is that the company will see increased interest payments on the purchases it's made. Now, the stock will open at 54.62. If you're long on this, your stop goes underneath this rising line of support. So you're stopping around about the 53.50 level with a view to taking it higher. But I'm not completely convinced this is a positive story. In the longer term, I want to make sure that I see that the company is undertaking the synergies correctly and making sure that they have a sufficient amount of business coming through those new acquisitions to make sure that the company is on the right track. Let me stay on the charts and just talk about Chevron. This is not all session stock on the IG platform. A story we picked up overnight in Australia. Disputes over pay and working conditions at Chevron's Gorgon and Whetstone LNG projects has escalated. The union has already called for industrial action for 7 days from this coming Thursday if parties cannot find a resolution. Unions now plan a total strike for 2 weeks from the 14th of September. Gorgon and Whetstone projects account for more than 5% of global LNG capacity. So individually, it's actually a big contributor to global LNG, and traders worry about the risk of long-term disruption. Now, where do we go from here? Well, it was a strong day yesterday, all sessions on the IG platform, closing not too far away from highs not seen since the 2nd of May. But so far, little or no effect on gas prices, high storage levels suppressing short-term prices. However, if the industrial action were to persist, analysts foresee complications in the supply chain. And it won't just be Chevron that'll be affected, it'll be other companies as well. Is this an opportunity to sell Chevron at the start today? It's an all-session stock on the IG platform. You got a chance to make a trade on this at 9 o'clock UK time this morning when trade picks up on these shares. Now, let's move on to just one other area of the market I want to cover. Because of the Labor Day holiday yesterday, there really hasn't been an awful lot of move for some of the commodities. I just want to quickly show you what's happening with gold, because a little bit of air has been taken out of the tires, currently trading 1936. Difficult to know exactly where this is going to go next. I think there's a potential for a potential buy-up of gold, but I think it's really going to be dependent on what happens with the US dollar. US crude, well, in the last couple of days, as you know, we saw this escape from this trend here. And we ended up trading, was that on Thursday last week, Friday last week, I beg your pardon, at levels not seen since the 16th of November. Since then, a little bit of selling in the markets. We get the API crude oil inventories, I think, out tomorrow now. That'll be something worth watching. That's it. We've got about 10 minutes to go before the start of today's European session. We'll be looking for a lower start to the trading day in the European markets at the top of the hour.